When we came into office, we had counties that had not been audited for 6 or 7 years. State statute said it will audit every county within 2 years. We had 10 of the 77 counties that were in compliance when we came into office. I will tell you this, that the western counties were a lot more in line. They weren't quite as far, but we had some in southeastern Oklahoma that hadn't been audited since 2005. And so what we had to do is we had to figure out how in the world we get from where we're at to where we need to be. And as we started going through the process, Cindy and I and the other managers sat down and said, okay, where are we at? What's the problem? And that's when we realized that back when Sarbanes-Oxley, which is the law that was passed after Enron and Anderson came about, that said that auditors could no longer prepare the financial statements and do the audits. We, for years, have been preparing financial statements, but we never came out as the auditor's office and explained to you that procedure has to be done. So what happened was, when Mr. Burridge came in, he said, okay, we have a problem here, we can't prepare the financial statements. And so during 2009, the auditor's office only did 34 county audits. In 2010, they did 35. If we're caught up, we have to average 77 to stay caught up. So we started looking and seeing what the problem was, what we could do, and then we realized that in 2010, a 2005 audit wasn't worth a whole lot. I mean, a lot of cases, what we need to do is we need to, if you're doing something that's not correct, we need to bring that to your attention and allow you to correct that. But what happened was, we would come into a financial statement audit and we would write you up for 2005, then we had to write you up for 6, 7, 8, 9, clear up to whenever that was brought to your attention and until you made that change. So what we said was, instead of coming in and doing an individual year and going in and assessing the internal controls and going in doing the test work and preparing a financial statement audit, we could do what's called an operation audit. And at that time, what most people don't realize, the laws were such that it was going to require most counties to do a GAAP financial statement audit, which was a lot more complicated. So what we did is we got the statute change that said that it was going to audit what you do. Instead of you having to take your financial statements and convert it into a different format, into a GAAP format, and it's government auditing procedure, putting that into that particular format, and then there's auditing that, what we said was, we're going to allow you to prepare your financial statements based on what you do with the estimate of needs, with your budgets and different things like that. So when we can come back and do that financial statement audit, we can say, here's what you've done. You passed this with your budgets and everything else, and then when we do our audit, it's reflective of what you did. Where before, you were converted to a format that was foreign to you, and so you had to be somebody that understood how it was changed and formatted differently to determine that. So we're going to end up with a whole lot better audit that says you have less to prepare because you just do the normal financials that you do, then we'll audit those. Now, but we had to get past that backlog because we can only do those we can only audit you according to what's called a regulatory basis, which is what you're doing in years after that law was passed. So the problem was to clear up that backlog. And so focusing on operational audits, we focused a lot on internal controls. And I know there's a lot of issues out there that people say, well, I don't understand quite how this works. But getting that done, we could go in, we could assess your internal controls one time on an operations audit instead of looking at each individual year. To make a long story short, what we need to do is a whole lot of audits within a short period of time in order to get caught up. We sat down and we set a goal of doing 3 years worth of audits in 2 years. Keep in mind, in 9 and 10, they did 69 audits. On the anniversary of the second year, I signed the 232nd audit. 3 years is 231 years. So we went from having 10 counties in compliance to we have like 68 in compliance now. We're getting caught up. Which means now what we're going to do is convert back to a financial statement audit and be able to do your financial statements based on the regulatory basis of the county, which is what you're doing, instead of having you have to have somebody come in and prepare your financial statements on that different method of county, which is a lot more complicated. In most cases, start again, we want to kind of explain to you where we were at. And I can tell you that we had the smallest transition of any office. When I came in, our transition consisted of me and a deputy auditor. And the deputy auditor I brought in was a guy named Steve Kinsley. He'd been in the office for 25 years, worked with Clifton Scott for 5 years as a deputy auditor. And then we brought everybody together. I will tell you, it's an amazing job that our managers did. It was Ricky Branch and Sherry and Marla Latham and then Cindy working together to come up with this plan to get caught up. And we know it's been it's stressful for you guys, but you can only imagine how stressful it's been for our people to come in and say, guys, we got to get this done. Because if not, then we would continue to stay behind, and we saw no other way to get there but to do it this way. So, any questions you guys might have on that? You guys want to get out of here? So,
I just want to point out is it might sound like we got in a hurry because audits out. We do, as the auditing office, we get audited by a review team from across the nation. Different people come in as one team and they look at our work papers to make sure we do everything correct. So you still got to come to work because we still have to follow all the rules of auditing. And how many of you have an operational audit? And that's just the audit where we come in and we, you know, it can seem very critical, but I do want to point out that county officials are management, and sometimes you're so busy you don't know everything of every step that goes on in your office, and those operational audits are meant to point out anything you needed to know to do your job better. You know, what kind of audit would we be if we came in and we saw a risk that something could happen and we didn't point it out to you? The only problem with an operational audit is it's pointed out in the report. Now that we're changing back over to financial statement audits, and again, that's very dependent on the financial statements that you prepare and send it to us. That's what we like. A lot of those findings that are in those operational audits will not be in the financial statement audit, but this is two different types of audits. An operational audit is meant to give you the information you need about the risks in your office. A financial statement audit is to give an opinion on whether or not your financial statement is materially correct. So there's a difference there. And one of the focuses of the findings for a financial statement audit, and again, that's what we're doing now. If we come in and we see that there are any internal control issues, segregation of duties, whatever, that could result in that financial statement being misstated, that's going to result in a reportable finding. But some of these smaller things, we're going to communicate those to you in a verbal finding because we want you to know what we want. And you want to know what we want, right? Yes. You want to know that you still want to report. And I can completely understand that. Because sometimes findings are not meant. They're taken in a very negative way and used against you. So that's the purpose of this class, is to help you get enough internal controls in place that we can make those findings exit findings only. And if that's what you want, we will give you the tools to do that. So, with that, we get started. Who's tired of hearing the word segregation of duties? It is. It's a very difficult thing. Another thing that you should know is that whenever the auditing standards change as a result of Enron, WorldCom, etc., there was a bigger emphasis placed on internal controls and the auditors on evaluating internal controls. So not only were you caught off guard, so were we. And it was not easy to go in and audit this way. What was the biggest thing that we used to audit back in the day that I so love you to remember? Whether or not you comply with the law, right? That was the big emphasis. Auditing standards have placed the emphasis more on what are you doing to make sure the financial records are accurate and that you are complying with the law. So, you know, even though we're one big division, Cheryl can tell you everything we do is county law. Everything. She's our expert. We go to her. We value her. But whenever we cannot do an audit, sometimes that's not what we're placed the whole purpose of the financial statement audit is to determine whether or not your financial statement is correct and whether you have safeguards in place to make sure it's correct. So, with that, we'll get started. Why is the proper segregation of duties so important? Well, it's important for 2 reasons. To prevent or detect errors and mistakes, and we know we all make those. One of the things the operational audits did, and I hope you can say that y'all don't jump out and forth between operational audits and financial statement audits. But one thing the operational audits did was to point out every weakness that was there. In a financial statement audit, we want to focus on the good things, right? If you have a problem, how do you solve it? You start with the biggest thing first. You start chipping away. So that should be our approach to segregation of duties. If we start with the big issues, maybe we'll have enough that we can solve, that everything else can be reported to you the next time. Because again, we want you to know exactly what you need to know in your office. We want you to know everything we're on. For instance, if you had told someone that the proper procedure for bank reconciliation was that they reconcile it and they have someone else in the office additional data to make sure it's accurate. Because anybody can do a bank reconciliation, right? And make it look right. You can, as a brand new auditor, I went to a company one time and they told me that sometimes there's issues you have to work out the bank reconciliation. Oh, it's already reconciled, it's great. Well, there was one line that said unidentified variance, and I failed to look at that. So, it's easy to figure those things out, and of course that person wanted to know how much they were off, and that's the way that they knew that bottom number had to match that general ledger, right? So they would put a little number up here. But you want a control in place that that person's really doing that. Well, if that's your procedure, and we come in and you tell us, this is how my office works. These are the procedures I put in place. If we find out that's not happening, do you want to know about it? Because those things could be, maybe there's a mistake, just human error, and maybe your budget looks like you have more money than what you really have. So it's important that everyone reconcile, and the person in charge of reconciling, somebody is reviewing. So we'll go on through here. However, and this is one thing I want to emphasize, we would never recommend that you hire additional people to have proper segregation of duties. And we get many responses from you guys know those are items to be familiar with, take a finding to you, and we ask you to respond. And you say, well, I can't afford to hire new people. Well, we're not asking you to. There's always something that can be done other than hiring new people. And if you just ask us, we can give you a lot of suggestions. The thing about proper segregation of duties is there are many ways to do it. There are many ways to do it. And what may work in one county, that same format may work in another county with just a few changes. But you have to know the whole picture before you make that determination. So what is the proper segregation of duties regarding the collections process? These are the 3 core duties that should be separated no matter what. Issuing receipts, reviewing the deposit ticket, delivering the deposit ticket to the treasurer or the bank or your treasurer's office. And then the bookkeeping, reconciling, and financial reporting. Those 3 things, at a minimum, should be separated. Now, if you only have 3 people in your office, are you always going to have one person receive? And then they're going to lunch or to the grocery where you can say, wait a minute, folks, we'll take your money when we get back. You just stand over here in the corner. No. It's not practical, and you never want to turn away somebody with money. It's one thing you might not get back. So what would be an alternative if you had 3 people in an office and you had 2 people issuing receipts? Could you have them review each other's work whenever the deposit's prepared? Make sure it's accurate and have an initial date. We're not saying you have to, this in an ideal world, perfect world, you would have those 3 duties separated no matter what. But that's not always possible. I know in some counties in Western Oklahoma, Sherry told me that there is a deputy and one other lady. comes as a deputy and part-time. So you really struggle for ideas on how to address this. There's always something that can be done, even if it is just reviewing each other's work. The bookkeeping, reconciling, and financial reporting, usually, who does that in a small county? The treasurer's office, who does that in a small county? Come on, guys. Well, even just the bank reconciliations. If you're a 3-person office, the treasurer does a lot of work, right? I mean, treasurers are responsible for a lot. If you're in the county clerk's office and you have people receiving money and you have to prepare the vouchers at the end of the month to, give the collections to the proper funds, you have a lot of work to do. Usually the county clerk or the official oversees a lot. There's nothing wrong with that, as long as you have controls in place to make sure it's accurate. And whenever we come in and we sit down with you, and you hate it too, because one, accountants typically don't really like to talk to people. We used to get to sit in an office and be our own person, and we don't like to ask questions, and we really don't like to write. And that's all our job is turned into, interviewing and documenting. And it is, I don't know what part of the paper production that came into this, but our audits went from being this thick to maybe this thick. So it's a lot of interviewing. And you really got to take the time to tell us what you do. Because there are so many things. I was on the phone with Amanda yesterday talking about the HELPA system. And I had no idea. I knew there were a lot of controls built into the system, but there are so many controls built into that system that I didn't even know about. So there are a lot of things that if you don't tell us your system protects against, you may not get any credit for it. Now, I'm actually compiling a list that will be approved by Helper to make sure my understanding is correct. And we'll make sure we get that work into the audit so that if you do have some of these core duties separated, in addition to what your system will do, I think you can get some of these findings out of your reports. But all of this is based on the information you give us. We've got to know how things are done in your office. And we've both got to have an open mind to what the possibilities are or what the risks are. So again, those 3 duties need to be separated no matter what. If more than one person issues receipts, not a problem. Let's just put additional controls in there to make sure that it's complete and accurate. What else is important regarding the collections process? The person in charge of reviewing the deposit ticket, delivering the deposit ticket to the treasurer, or if it's the treasurer's office, delivering to the bank, should be very careful in reviewing and signing off for accuracy and completeness. Every example I'm going to give you today of how embezzlement or errors have occurred are real situations in the last 2 to 3 years. So this didn't happen. This is not just some theory. The cash, check, and money order totals should agree with what's in your hand. The names on the checks and money orders should agree to the name on the deposit ticket. Okay, I know that money orders are just like cash. Checks can almost be just like cash. Money orders are a little harder to track. But anybody could take a money order out, or a slip money order in and take cash out. So if you have receipts coming in the mail in the treasurer's office, it's good to have 2 people open the mail and make sure every one of those items get received. This is true scenario. We had an issue where one person was in charge of opening the mail, and then this person would take it and give it to somebody else to receipt. But this person was also in charge of taking the deposit to the bank at the end of the day. So any check that came in for out-of-town taxes, for out-of-town people or somebody that wouldn't know better, if they didn't want to receive that, they would wait till the end of the day, and when they were delivering the deposit to the bank, they would get that check in here and take the cash back. Now, on the deposit ticket that you get back from the bank, does it have how much was cash and how much was check? Pretty sure. Different banks do that differently. But how many people actually look when it comes back? You're saying, oh, that's done. Something on my list. Do Do you ever stop and compare cash to cash and checks to check? Another thing that you need to know, you need to make sure that the names on the checks actually agree with what's listed on that deposit ticket. This is another true story that just recently happened. Money orders especially. Money orders come in, they're very susceptible, especially if it's set amount, with a fee that's being charged. Somebody can take that out, the deposit, and slip another one in. It's called blacking. And this just happened in the district attorney's office. This is nothing confidential, this is out in our report. You know how your treasurer has a cutoff time every day? Have your deposit down here by this time, it's not getting close until the next day, right? That's in every county. And you have to have that, you have to have the cutoff, because the treasurer has to have time to deposit the deposit and give it to the bank. So, what would happen is after that deposit was taken to the treasurer, there would be more collections coming, right? And they would be there for the next day. There would be no collections. Well, it got to where she was borrowing. And most times people start out borrowing, they don't start out just saying, I'm just still that. They get it under their head, something happens to them, they need more money, so they think they'll borrow. So what the lady would do is she would take this one and borrow it. Then whenever something came in, the next day she would put it in its place. Because you know that bill had to be paid. So it turned into this big laughing scheme, and things would just substitute here and there. It can happen, and I know you're thinking, well, the money order is made out to the district attorney's office, how can you really cash that? How can you do this, how can you do that? There were some cases where the money order was taken out to the local vendor cash. You have young people working in the teller line, the bank, you have young people working at a convenience store. Who do you trust? No? Who do you trust? You trust your county officials. If you're a young person, you're intimidated, you trust them. It can happen. Another instance we had was where, a rebatch was cash in the bank. We're talking about a $20,000 check they got to the county that somebody at the bank cashed, gave back $1,000 cash to the county officials. Don't think it can't happen. It can, it has happened, and the best thing you can do is to put controls in place to keep honest people honest. I really believe that this is the state of Oklahoma, which I'm on, and people are honest, and I believe that situations just get hard sometimes, and it's under control. So that they know that at the end of the day, you're looking at the receipt names, and you're comparing it to the names on the checks and money orders. Is somebody going to try to do something? Probably not. That's why whenever you have people receiving that are also depositing, you want to switch off and not check each other's work. You want to stress the importance of accuracy. If there's a question, it should be brought to you immediately for you to investigate. Anybody have any questions about that part of it? What else is important regarding the collections process? We talked about the 3 core things that need to be separated no matter what. Now you can add to it to make it stronger. How much you add or how much you don't add will depend on how strong your internal controls are and whether or not we can take a finding and reduce it from a reportable finding down to an exit finding. Separate cash flows back. I know that everyone doesn't like that. I know we've broken the separate cash drawers and they probably literally meant separate cash drawers, and we really don't care if it's cash drawer or if it's money back. We just want to have one person responsible for X amount of money. And it's not just about $25 they're responsible for, it's about any collections they take in. A mail log. A mail log is strengthening your internal controls. And that is no one wants a mail log. No one wants a mail log. And I understand why. But what's the whole purpose of a mail log? And maybe you can design something different that fits your office. But the purpose of the mail log is to make sure that everything that was mailed in got received and got to the fund it is supposed to go to. So, just like the instance where I told you one lady took the mail and handed it to somebody else's receipt, and then at the end of the day, anything that she didn't want to hand off to receipt, she just cashed out the money back. Maybe well, if you don't keep a no log, we're not going to say you absolutely have to have a no log, or it's going to be a reportable finding. You may have enough of everything else, where we're still going to tell you in the negative finding, hey, this is a risk, you should do this. But we know that you like the exit findings better than the reportable findings. But you may say, you know, I'm going to have two people open the mail together, and both of them are going to make sure they proceed. That may be your control. It's up to you to weigh the risks of what can happen. Separating and monitoring the IT authority to avoid receipts. And this one's tricky also, because if you have 3 people in the office, or even 2 people in the office, doesn't everyone need to be able to avoid a receipt because one of you step out? It could be a problem, right? Internal controls can be either preventative or detective. A preventative internal control for this would be only one person has authority to avoid a receipt. Well, that may not be practical for you. The most practical choice for you may be that both people in the office can avoid receipts. However, I'm going to start monitoring avoided receipts and make sure they're not excessive or there's a real reason to avoid receipt. Because what can happen with avoided receipt? Somebody comes in to pay cash, you give them a receipt, they walk out the door, you avoid the receipt and take cash. Real incidents that can happen. So it's okay if you don't have that completely locked down, and it's better to have it completely locked down, but in small offices, that's just not going to get you there. What you need to do is monitor that. And I talked to Amanda yesterday about what systems would turn off. I called it an audit log in language, and I was incorrect. Because they don't have, at this point, an audit log that will just immediately generate the information. In my understanding, it is something that county clerks can ask for, or county treasurers can ask for, so that it is incorporated into your system. And, you know, if that's something that you want, they can put that in there. Everybody's not with Velcro, and some people are with Tom Martin. Tom Martin does have a security log that you can use for avoided receipts. But, no matter what, you should be able to monitor every number in sequence, right? If it's a small county, you probably don't have that many receipts. So sometimes you need to monitor if anything was avoided that day. Investigate it. If you have somebody avoiding receipts 5 to 10 a day, even 5 a day, do you think it's a problem? Maybe. You know what? Chances are you're already looking for this stuff. Maybe you could tell us that whenever we're doing our internal control walkthrough, and you can get credit for it. Maybe you need to put at the end of your deposit ticket every day something, receipts number such and such will monitor everything with issues and sequence. Show us something that proves you're monitoring this, that you're keeping up with it. Because I really believe most of you are. Most of you do this in such a way it's second nature to you, but we don't know what you're doing. So you've got to be evidence of this so that we can give you credit for it and give you for the findings. Separating the IT authority to adjust or write off accounts. Does everyone know what IT means? Information technology, computer system. That's all we're talking about here. It just looks easier to write IT rather than write computer system in that place. You don't want just anyone with the ability to adjust or write off accounts. And there are not many things in county government that you adjust or write off. But what about in the treasurer's office for add-on taxes? Interest, fees, penalties? Can those things be easily adjusted? So make sure you know who has the ability to do that. Make sure you're monitoring how many adjustments or write-offs are made, that they're appropriate. Any questions about that? I'm going to stop every so often to give you a chance to point out something that you may not think is possible to happen, or maybe you have a better idea that you want to share with the group on how you do this in your county. Because everybody has some good ideas, and there is more than one way to do these things. Okay, before we get into the expenditures process, I want you to look at the handout. Actually, it's the only other handout we have. So, in a timeline, what's the hardest thing about what we're asking them all to do? I always say, well, we need to document, well, how do you do this, or how do you do that? Do you ever wonder how well you can document it? Where you're going to put it, where you can find it a year or two later when you come in and ask you where you put it at? I mean, how do you document policy and procedures in your office? Take a look at this. It's internal controls over cash receipts. And I have across the front of this limited example because I just quickly put this together as something that might help you. And let's just look at the first line. The internal control is to assign a separate cash flow to each employee responsible for collecting cash. The reason for the control in the second column. Assigning a separate cash drawer to each collector provides individual accountability over the cash received by that person. If an employee is stealing, separate cash drawers and individual accountability will make it easier to trace the theft to the responsible party. So how do I address this in my office? In this example, this is just something that I wrote in here, something that you could answer if you have a form like this. Separate cash drawers or bags are assigned to all individuals who collect funds and issue receipts. Not all employees have a given cash amount. The separate drawers or bags keep an employee's receipts issued and the money collected separated for balancing purposes at the end of the day. How many of you do this? Come on. How many of you do this? Few. How many of you have written policy for this? How many of you have, something in writing that you can show your employee, this is why we do this is what's expected of you. If you deviate from this, we will know why. On the second line, restrictively endorsed checks as soon as they are received. The reason for this, immediately limiting the negotiability of checks ensures that checks received can only be deposited into the county bank account. How many of you think you can do something with a check now to the county treasurer's office? Come on, I've already given you some examples. How many of you think that a check can be taken and misused? Okay, it can. You can take almost anything to a non-deposit box at the bank and put for deposit only. You don't need to sign anybody's name. Put for deposit only, put your deposit ticket there, and it will be credited to your account. And when you caught up a lawyer, probably will, but that bank will credit that to your bank account. Only if somebody else finds it are you going to be in trouble for it. You guys know that? It is possible. Very possible. One of the things that, and I've talked to a couple of different people that work in that deposit, or that work in the bank, that handle that deposit, do you know what they tell me? They have so many days to hurry up and count it, balance it, and make sure it's all posted before the customer shows up. A bank will be the first to tell you they are not looking at anything on that other than dollar amounts and account. Don't ever think that. So, I've heard some traders that whenever I was actually living in narratives, they would say they didn't stamp checks until they got ready to take it to the bank. And I never really understood that. Didn't argue with them because they're obviously they can do what they want. But I just don't see any reason why when you take a check, you don't immediately stamp it. It's going to immediately restrict that. That's one of the easiest things that you can do. And if you have a policy in place similar to this, where you tell us that that's a policy for your office, what is this? It's internal controls. Something like this is going to take your reportable finding, and if we do find anything, it's probably going to be an exit finding, not a reportable finding. Let's just go ahead and go through all these, because I want you to understand that there are real things you can do. We just need documentation. The office copy of issued receipt forms or the audit log should be periodically reviewed by supervisory personnel, and any gaps or missing receipt forms should be investigated. Original copies of voided receipts should also be retained. Moving on right here. Okay. Now, instead of audit log, some systems don't have an audit log, but there are other things you can do. All you have to do is go to yesterday's deposit. If you ended with a receipt number 300, you go to today's deposit, what should today's deposit start with? 301. Does anybody ever check that? Probably do. Do you tell us you checked that when you're done their narrative? Do you ever think about that? Maybe a document like this will jog your memory when we're really coming to talk to you. Okay, this is what I do. Maybe we need to put a note at the bottom of the deposit ticket. I checked for gaps, or I verified the numerical sequence of the issued receipts. Everything's accounted for. Initial dates. That's all we need. You should be able to see every receipt. And, in talking to Amanda at Kelro, if you order a receipt, you can't reissue that receipt. That's another thing that I would want to put on here. But what happens if cash comes in the door, you issue a receipt, then you void it as if it never came in the door? Your system can't catch things like that. That's why you still need to monitor. You need to be asking, well, why do you want to avoid this? And sometimes there are real reasons, right? Have you ever had somebody come in to pay, and you get the receipt all typed up and you hit print and say, oh wait, I found the checkbook? That really happens. So there are real reasons that you need to avoid it. The things you can look for is whenever you have an employee excessively voiding receipts. So whether you have an audit log, or whether you're just looking at sequential receipt numbers and making sure they're accounted for, either one is a monitoring control. The last one, secure undeposited cash and prepare deposits in a vault or safe or other locked storage until they're deposited in the bank. Restrict access to the vault or safe, or keep other storage methods locked and not used. Securing cash limits unauthorized access before it can be deposited in the bank. Every once in a while, my cash was missing, people have to be called and say, there's $100 missing out of our deposit today, what do we do? You gotta figure out what to do. You can do one or two things. It could be human error, either it was counted wrong, or it could be somebody took it. This happened in one office, and the court clerk felt the need to put in cameras. What would else would help prevent that? Separate cash orders. Making that person responsible. It probably would have happened more than once because of some. If I make a mistake and it costs me $100, I can tell you I get really careful. On that, deposit collections daily. State statutes require daily deposits and collections for all offices. From an internal control perspective, the best approach is to deposit money as soon as possible. The longer money remains undeposited, the greater the risk of loss or theft can occur. How do you address this? The example could be, I have a policy in my office that we deposit every day. The treasurer's cut off as such and such. Or the treasurer can say, we take the deposit to the bank every day this month. That's your internal control. And that is an internal control. It's something that you do to keep money from being anywhere that somebody is taking. Deposit cash receipts intact. The reason for the control? Intact means that all cash collected since the last deposit must be deposited in the same form as it was collected. This practice deters the cashing of checks from the proceeds of collections. And that was one of that last scheme I told you that you want to make sure whatever you receive is actually what's on the deposit as far as checks and money. You want to make sure that something's not being held out and then deposited the next day where something else is taken. Those things go on pretty quickly. The last one, prepare and maintain detailed deposit slips. Deposit slips must be detailed enough to identify the composition of the deposit between cash collected and individual checks deposited. The reason for the control is cash receipt transactions can be easily identified, traced, and corrected if detailed deposits are prepared. Also, it's going to limit any kind of misappropriation. So this is something that was just put together very quickly. Is this something that you can take back to your office, if the auditor's office prepared these, and implement them and make them policies for your individual offices to help document your segregation of duties, document how you're addressing these risks, and then whenever we come in to do our interviews, those painful things where we hold them hostage for an hour or two at a time. Wait, how did you say you did this? Would this be a valuable tool to you to take back and use? Raise your hand. Please, this is going to take a chunk of time for us to do this, but we're willing to help. We do need to emphasize that these examples, and I'm willing to give one, and the examples are based on what I know some of you do. So they're just an example, because if you tell us you do that, we're going to go out here to see if you do it. And then we're going to give you credit for it, and we're going to reduce those findings from a reportable finding to an exit finding. Because again, please don't take those exit findings as being critical or offensive. We want to know what can happen in the office. We just don't want to interrupt everybody to see. Right? Okay. So again, if we did this for cash receipts, expenditures, and so forth, would this be something that you would use in our joint effort to make the most out of our audit process? Okay. We got the same response from the last class, and I think that this is something that we could easily do. This is just an example. You can add to it, you can take away from it. We just need you to document something and give it to us and manage your process. And we can give you all kinds of ideas of how to do something, but whether or not you do it, it's your choice. It's your office. You don't have to do anything. But we have a responsibility as an auditor to point out any weaknesses of what we do. And we just want to help you get to the point where you document these things easily and get it to us. So let's move on with the expenditure process. What is the proper segregation of duties regarding the expenditures process? These duties, as I mentioned, should be separated. And for the most part, they are separated. We have a requisitioning officer, receiving officer, a bookkeeper who maintains ledgers and has access to check stock, and authorizing signatures. Now, one thing that I want to point out here, because it seems like that we're talking about the purchasing system here, right? The purchase orders. Duties should also be segregated whenever you over your official depository accounts, right? I know it's against the statute to make expenditures from your official depository account, but it sometimes happens. Sometimes you'll have an officer who doesn't understand that that's not really a checkbook, that's just a transfer of funds, and they'll go buy something from their official depository account, right? I hate to call out any particular officer, not by name, but by office. So we have some offices that, or one office that sometimes does that mistakenly. So you need to have those things done. Here's a real example. And I hate to, these are published reports, so I'm not up here saying anything that wasn't on the front headlines of the Daily Oklahoma. But a court clerk's deputy embezzled almost $1 million in 9 months. How did that happen? She misjudged herself and took it in 9 months. That's pretty fast. That's a lot of money, very quickly. Again, you want to ask me if the bank pays attention? Now, I live in Colgate, and I'm pretty sure that my small town bank is suddenly see $100,000 right going to my account, and they would be asking questions. When we live in a big city, who asks? Who cares? You know? So, you want to be careful and you have access to that. Had somebody say, well, it has to be registered with the treasurer. Does the treasurer always want to catch that? Does it check it out to somebody who appears appropriate? They're going to register it to see if there's no money in the account. They're going to see if there's no money in the account. Then they're going to register it. But they're not going to catch anything inappropriate. So you still need to segregation duties of those items too for your official depository accounts. I digress. Let's get back to the purchase part. Okay, requisitioning officer. I know that the purchasing agent will sometimes give a PO to somebody who's not a requisitioning officer. Sometimes it's given to the person who's also a receiving officer. So, if I'm a receiving officer and I call down and I say, I need a PO for this, and the purchasing agent gives it to me, and then it comes in, of course I'm a receiving officer, I sign that. Where's the safeguard that what was ordered actually comes to the county? You may have ideas? In smaller counties, it's easier to track because you don't have any money in the base. So if somebody's making some used 20 vehicles, and she was using them for her personal detailing business. So it was legitimately sent to the county. She was a receiving officer, not the requisitioning. She was allowed requisition, and of course, she was a receiving officer, so she knew how much was coming in. She was funding her own detailing business. So that's why those things are important. The bookkeeper who maintains ledgers and has access to check stock. And the authorizing signatures. Anybody disagree with that or have any ideas that how they handle things in their county regarding segregation of duties of the person process? Do we feel like that those, Title 19, 1505, it talks about the different duties each person has. It has several things in there that I know the county don't follow word for word. And as the auditor's office, we're more concerned that internal controls are in place. We don't write you up for every little single law that county follow. We want to know that you have enough controls in place to safeguard assets, or we're going to do a reportable finding in your audit report that says something could happen here because there are not enough controls in place. So anybody have any issues with purchasing they want to throw out there, or questions about why these are so important to separate these things? This is pretty standard because this is what we've been doing. What else is important regarding this financial process? Properly completed claims, original itemized invoices, again, statements are not an itemized invoice. A statement should more list the total of each invoice, not the items that were purchased on each invoice. The signature stamps are used, they should only be used by the person to whom they belong. Write-offs and adjustments to accounts should not be performed by anyone who issues receipts, delivers deposits, or has any access to collections. And again, we talked about delivered receipts and deleted receipts. Should you ever take an altered deposit ticket in the treasurer's office? We talked about how each office should verify cash, check, and money orders for the deposit ticket, and it should be signed and dated at the bottom. Would you ever take one that had big old whiteout across the top of it, like it deleted the whole line and then corrected the total down here at the bottom? Every once in a while, there might have been a mistake. Would you do that every day? No. Again, true story. This is just for fun. Disaster recovery prevention methods. Disaster recovery plan. How many of you really buy in that these are important? You be honest. Okay. One, you always should have a contingency plan. We always should have a backup plan. Well, for most things in life, because life is very uncertain. We live in Tornado Valley. But was it Woodward County courthouse that was hit? Was the courthouse hit? We have several counties where records were destroyed. Maybe they get destroyed by flood. What does that work against on the computer system? Did backups? Probably. Do you know you have backups? Or do you just know that they said have it? Because I'm really confused on backups. Not in county government, but I have something in the back of my computer. I'm like, is that really back that up? I don't see that. No evidence. Is it really happening? But I just try to do this. So you have to make sure it's your responsibility. Good internal controls require that you be able to restore your records and continue operations in a timely manner. The disaster recovery plan is pretty easy. But what if everything was gone? How many of you know how to get in touch with everybody very quickly? Do you know? We all have internet access to everything else, but what happened in the war? Where did they go for internet access? When people have gone on to them for a while. How do you go and how did you restore everything? It takes no time to put this down right. And it's something that is required for your life. So I suggest Be prepared for the unexpected. See that cat coming out of nowhere? When you least expect it. Life's uncertain. We have no idea what can happen. The role of the auditor's office is we are performing a financial statement audit. What are you doing to ensure that your financial statements are correct? Because we're seeing a lot of mistakes, especially on the CETA. We talked about this in the last regional training. What are we doing to make sure that these financial reports are correct? Because if you can't report to us, or if your statement is $1 million off because you left off a grant, how can you convince us that you're taking care of this? Financial reporting is your responsibility, and you've got to know what you did so that we can audit it. Your financial statement. Do you ever look at your financial statement? Have any of you, don't even penalty for any answer to this, have any of you ever looked at your audit reports and filed and made a file? Have you ever looked at the charts in the front to show how good the account's doing, where your money's going? Have you ever looked at the financial statement that shows all of the restricted cash lines, how your money's being spent? Because you may be accountable and you may be taking an active role in collecting and spending this, but you're still a taxpayer, right? I know that some of these reports are very dry and boring. And sometimes we wonder why we issue these things. We do it because we have to. And because we love it. We love to see you every year. We missed you. We're coming back on and out. That these reports, these financial reports, are supposed to be accurate. If we can't give an opinion that you're doing your job and you're accurately reporting it, if you give us a financial statement that's completely wrong, that you didn't take the time to make sure everything's on, or that you let one of your grants on. Federal government requires that you have internal controls in place to make sure your financial reporting of federal grants is accurate. And if you give us a CETA that's materially incorrect, then we're going to have some kind of internal control time, because you tell me what was the control to make sure that was accurate if something was left off. What are your responsibilities? Review your financial statement and your CETA to determine if it's correct. We want to see if you put procedures in place to ensure all funds are collected, reported accurately, and expended according to statutes. If internal controls are not designed in place, there is no assurance that any of your financial information is complete and accurate. True story. We talked about the importance of encumbered funds. There was one county that had $170,000 worth of expenditures charged up that did not have a purchase order related to. Was the financial statement corrected out here? No, because nobody knew about this. That's been 4 years ago. Not 3 years ago. Just the other day, they had another year come forward and say we never got paid. Where's our financial reporting process? What's happening here? So, if the internal controls like only requisitioning officers are allowed to charge, you're not allowed to have charge accounts down at these different vendors' places. If those controls aren't in place, how sure are you that your financial reports are accurate? That's why it's important to have internal controls and to make sure that people are following. What could have prevented that? Obviously, it was official, because, surely an official would know what was going on. But what if there was something that happened and money was not properly? What kind of recourse do you have? Because as a purchasing agent in the county clerk's office, even as the Board of County Commissioners, when you look at a claim, you're going to see this was not encumbered properly. Why is this happening? Take action. It makes me nervous now until you have to explain to the citizens of your county why you're having a friendly lawsuit in the county and their working together to ensure accurate and reliable financial reporting. What's the one financial report that you all have to work together to get right? See that? Right. The federal expenditures? Because FEMA, for one thing, for where the teacher out is crazy, FEMA happens at each farm. And if that is not being reported correctly, can it throw your whole season off? If the work was done in one fiscal year and it be reported in another, does that make your season wrong? Or they can just work together. You're one county, you're one group. And so what I would suggest is, I'm going to make one of these that says this is what our policy is. Again, it doesn't count if you don't do it. Just because you have the paper to show you, got to prove you did it. But maybe if we offer some suggestions on how to wrap all of this stuff up as a group, you can do it in a Board County Commissioners meeting. There's going to have 30 minutes there. Evidence we should discuss it. And that would be one of the items for all federal programs approved and discussed in our meeting, where the compliance requirements explained. Was there one person who could charge this? Are they aware of what the federal compliance they have all of the rules? An easy little checklist that you could have for each federal program so everybody knows the rules. One of the things that still surprises me is that, we might have asked for some things and some people don't know because no one ever explained it to them. We had some catching up to do too to make you aware of what the rules were. But in those grant contracts, it always said what the rules were. It's just nobody really zeroed in on and said, what is this? What is the compliance supplement? What do they mean by circular 832 requirements? Because in all your federal programs, that was listed in the grant contract. There are 5 elements of internal control. And as you can see, number 5 is for segregation of duties. We keep focusing on segregation of duties, but it is just one part of 5. There's a control environment, information and communication between the different offices and functions, how the county assesses risk, what kind of monitoring activities are put in place, and then control activities, which include your segregation of duties. I know this seems like a lot, but it's really not. It's just as simple as documenting your communication. And again, the checklist, I think it would be very simple to address some of these issues, and it could be a lot of times. Control environment, you all need a policy and procedures manual. And it doesn't need to be dated 10 years ago. You need to be a current one. Even if you just say, we reviewed it this year and it's still good. Effective as of this date. Another thing that we don't see in policy procedures manual is the another tone should be established by the top county management and should be communicated throughout the county. For instance, like I was talking earlier, if you have 2 people issuing receipts and performing a deposit, and you just say, oh, just put your initials on that, it's fine. What are you communicating to that employee? That it's not really important to follow the rules, right? And it may seem tedious or cumbersome at one point, but then one of these days you're going to really wish that they had taken that help seriously if there's a mistake. Or, worst case, if money's taken. It's important as the officials to make sure people understand and follow the rules. Management should convey to employees the importance of internal controls and how this relates to financial reporting. Maybe your employees need to understand that it's important to follow these rules because we want to prove we have enough controls in place in my office. That the taxpayers understand I'm doing everything I can to safeguard government funds. Don't we wish the federal government would do that? It starts here. If everyone knows how important it is, they will follow the rules. They just need the expectation of that. Information and communication. Financial information should be accurate and available to make informed decisions. This one I think most everybody does. The clerk and the treasurer have reports that they can generate for research. Very current, accurate information. Sometimes the different offices don't know what reports are out there. For instance, how good would it not on my payroll. You know, how good would it be to get the governing body good financial information each month so they can put the brakes on some spending if they need to, so that everybody's being fiscally responsible. And these reports are easily generated. Does anyone prepare financial statements that can be used to measure how the county stands from a financial viewpoint? I know I've talked to treasurers before, and I know treasurers compare what they collected this month to what they collected a year ago this month. Do we ever talk about that whenever we're talking about budgeting, where the auditor comes in and starts asking questions? Do you ever tell them that so we can be ready for that? You're monitoring at a higher level, just what today's elections are. If you start to get to the collections start to fall short, do you communicate that to the board? I had a county that the oil and gas business packed up and left $11 million shortfall. I mean, very small county. But because the treasurer and clerk was on top of things, and they were communicating in the board meeting once a week. This is where we are. This is where we are. This is what's happening. And we could see it because the discussion was in the board minutes for us to see. And it was tough on them that they had employees, so they could still have it. They had health insurance, they could still have it. Of course, today that would be well. Then they cut the officer salaries just recently. But they knew ahead of time. This has been a 2-year process. They knew 2 years ago that their revenues were going straight down. And they put steps in place. What had happened to the county treasurer and county clerk had not been communicating that to the board of commissioners? It could have been disastrous. I mean, you could have ended up at the end of the year and they could have maybe possibly had to let more people go. I don't know if they couldn't have functioned in general fund. They had sales tax they were using, and it was paying part of the salaries. The board had a meeting with the revenues were declining. So that kind of information communication is very important. Risk assessment. This is possibly the most important of all functional elements. If you're addressing risk, you will be able to cover all of it out easily. Because what are you doing when you address risk? You're trying to figure out what's the worst case scenario, what could go wrong. For instance, you know, the county clerk and county treasurer meeting with this board and telling them, hey, this is happening. They immediately start addressing risk. What are we going to do? What's going to happen? Where are we going to be at? And there was this communication with all elected officials of how are we going to handle this as a group. Discussions could include risk of fraudulent activity, which could include misappropriation of assets, improper use of county assets. You know what could happen if a commissioner was informed that somebody was involved in using equipment? That's a risk, right? It's not supposed to be doing that. Could end up being liability for the county. They get out here and hurt somebody while they're inappropriately using county equipment. One thing that they could do is, you know, they could either update the policy and procedures manual to make it very specific. This kind of behavior will not be tolerated. You know, address the risk that you're facing at that moment in time. Maybe there's nothing you're facing right. Funding shortages, changes in key personnel. What would you do if a purchasing agent that had been there for 20 years touched to retire? You didn't have any contingency plan. What do purchasing agents generally do? I'm going to drag on that because I know they have great work. They generally know who their problem children are and they help get their documentation together. So you know you're going to have a change in key personnel, it's going to get risky, right? Because usually they know that if they make a purchasing agent mad, their life will be hard. So you have a new one coming in, they need to know what their responsibilities are because this new one's not going to know how to take care of all these people, right? How are you going to cross-train? How are you going to make sure you address that? And I know that may seem like that's just the county clerk's problem, but what's the real issue? Purchasing agent touches very office in the county. So it may be that each officer needs to communicate to their employees, hey, we're getting a new purchasing agent, you need to make sure you have your stuff in, make sure you cover, make sure you're doing everything you're supposed to. Address the risk you're facing. Monitoring. The county should periodically monitor operations operations to determine that procedures are being followed and the procedures are adequate. Review audit findings to ensure they are timely corrected and the issue is resolved. Have any of you ever been surprised by audit finding? You didn't really know that that was an issue in your office? I don't mean that you knew about it, you just didn't know it was an issue. I mean, something that was brought to your attention that you really didn't know was going on. You know, has there ever been a time where when you had an employee who was going out making expenditures they weren't supposed to? Try to do something up. Gosh, you gotta just have some good times. But if you have an audit finding, how are you going to make sure this is not going to be an extra job? And maybe you feel like it's not important and it's not worth your time to address. But what our goal is to be responsible and to let the public know how responsible we are handling their funds. So if you have an audit finding, how are you communicating that to your employees to make sure it's correct? For instance, if you had an audit finding that your federal expenditures are not being properly expended, again, that covers all offices. Are you going to go out here? How are you going to get the information out to everyone? How are you going to monitor it going forward? Maybe if you got to the point that your emergency management director had applied for a grant, didn't know he was supposed to bring it to the Board of County Commissioners meetings, all of a sudden there was just $5,000 showed up. How are you going to make sure in the future that he knows everything has to come through the county? How are you going to monitor that? Maybe at the beginning of each fiscal year, bring all these people into the meeting and tell them what the expectation is. If you're going to apply for anything, these are the proper procedures. You're going to have to bring it to the board. It's going to have to be approved. We need to know that you know the responsibilities that are required by this grant, what your job is going to have to be. And last, the county should periodically review procedures to determine that internal controls are operating effectively to ensure financial reporting is correct. Do we wait till the very end of the year to start this? The financial reporting, or do we do it all year long? All year long. County treasurers prepare our own report each month. What are we doing to make sure that's correct that month? We do make a reconciliation. We make sure we balance. We make sure all of those appropriations get on that first letter. We reconcile between treasurer and county appropriation money. So what would be a form of monitoring? Making sure those reconciliations are prepared each month, because you're building a financial statement each month. If you're making sure these processes are done, you're monitoring. How can the county document internal controls? And again, we'll soon have one of these out for every part of the audit activity, whether it's cash receipts, cash disbursements, whether it is countywide controls, whether it's internal controls over your federal programs. We'll have an example out there with some kind of option on how you make that control. Again, it's not how you have to do it, it's a suggestion. You can do it however you want to, or you can choose not to do it at all. The whole point is just to try to help figure these audit findings. And I've been talking about this all along, so over this. Countywide controls concerning federal programs. Somebody needs to be pulling all these federal programs together in one financial report for the fiscal year. It's very important. Very important and accurate. These are things that are reported whenever you finish your audit. And if you spend $500,000 in federal programs or in federal expenditures, we have to complete a form called a data collection form. Some of you that have over $500,000 are probably familiar with this. It's just a form that lists all your federal programs. It lists out if we have any kind of findings, and it's sent to the federal clearinghouse. Now, I've never seen anyone not get a federal reward because of anything we send in, but if money gets tight, that may be something they look at. So it's important that we get these findings corrected so that you don't have any kind of delay in federal programs. A lot of us have already been on 48 years here. This is just miscellaneous information. corrective action. Whenever you give us your response, we're gonna come back next year and audit you on that response. So if you tell us you're gonna fix it by doing this, this, and this, the first thing we have to do when we get there next year is pull out those previous audit findings and see if you really took action. One thing that we can do, one of the hardest things to do other than public speaking, is writing, right? It's hard to sit down and write something out. You don't really know what we want. It's hard to address some of these findings and you don't have any ideas on how to fix it. If you need help with your audit findings, or you need ideas on how to fix it, please stop us. Our job is to completely explain those audit findings so that you understand why we're writing them. Don't ever accept an audit finding that you don't understand. It's our job to help you with this. And if you want us to sit down and help you come up with a plan of action, things that would take care of this for the next fiscal year, we are here to do that. How many of you struggle with those responses to audit findings? Anybody? How many of you just don't like making them all? What could we do to make that easier? Any suggestions? Because we're open to hear, what we can do to assist you with these. And the answer can't be just don't give it to us all. We're working on that. That's what this class is about. But if you don't really know what to put down, if you really have no idea, let us know. Because if you just put something like, I've never been told this before, or we don't have enough people in our office, we have to come back with an audit response that says, well, you still have a requirement or an obligation to put internal control in place, or you have an obligation to fix this. And we really hate putting our audit response in. We'd rather come up with something that helps both sides, a plan or solution to the problem. That's what we're here for. Any misunderstandings that you have in your audit findings that you don't agree with, if it's been explained to you by a supervisor and you still don't understand it, you need to call the manager, the audit manager. We want you to understand this because what's the problem if you don't understand it? Can we fix it? If you don't know why they're saying something, or sometimes if you just explain to someone why you need them to change that, they can figure out how to change it. And it makes it be not just something, oh, well, because you said so. We don't ever want to find it that way. There's a real reason we make these audit findings, and it takes us a lot of time to actually write these things. Let us know. Receiving reports. What is the purpose? Look at your little handout. Your audit handout. And it is after that, number 9. I'm getting a lot of questions about this. Whenever we got this together, I called Cheryl and asked her about what were some of the questions she was receiving, and we decided I decided to put this in here so it would be clear. To verify that goods or services were received to the county, and this additional documentation that the expenditure was a true obligation of the county and it was accurately paid. Now look at the please note part. We have advised that all expenditures should have some level of review prior to being paid. We do not require that receiving reports be completed for utilities. Rather, we advise that someone should be looking at the bills and ensuring that the county is only paying utilities that are the responsibility of the county. This review should be documented with initials and a date. We have had some findings for the utility bills for the community center were being paid from highway funds, which were an inappropriate expenditure of that fund. The county had the utilities turned on constructing the building or regrant and failed to ever have to change. Some form of internal control should apply this. It has also been found in another account. Just because the utility bill was turned in doesn't mean it should always be paid, right? How easy would it be to look at another utility bill and without? Utility bills are kind of sick, right? Has anybody ever checked to make sure those are really a bill of the county? determine that the bill is an obligation of the county. We advise that this could be done by initially indating the utility bill, lease documentation, whatever it was, or they can complete a receipt report to attach it. The only reason that was suggested is some wanted a form to put this on. They're like, well, we have to do it, or we're supposed to put it. So, well, put a receiving report that you verify. It turned into, oh my God, you want us to do a receiving report for utilities? That's not the point. The point is, why is the utility bill for somebody other than the county being paid? Why do we see refunds coming in where lease payments are overpaid? Who's checking to make sure when the lease purchase pays off, you pay the final bill when you're done? Or is somebody just eventually, just out of habit, because they forget to go check, making an extra couple of payments that they forgot paid off? So again, you don't have to have receiving reports for those things. But there better be some kind of internal control that you're not paying out the county's money on stuff the county doesn't know. Because that would be an even more embarrassing money to have. We don't want to pay any more than what we actually have to pay. Regarding travel claims, the signature of the person claiming the expenses is enough. You should be, if the county is paying for the hotel separately, there should be some kind of indication that the service was received. They can do this in two ways. First, they can attach a receipt report. Secondly, as an alternative, they can reference the PO for the hotel expense to the travel claim where we could determine that the expense was legitimate and someone did receive the service. Isn't that responsible financial reporting? The whole point of a receiving report is to ensure the county receives the goods or service. If documentation of this can be provided in another form, we should consider it. We just want to see that the internal control is operating. We don't care how to do it. Encumbering utility bills. When you receive the utility bill, you should stamp date and time. You should stamp the date and time received. Encumber it as soon as you get the bill, and make sure that the bill is reviewed as a true liability of the county. Now, whether or not that bill should be encumbered the first of every month depends on how close you're living to the edge on your funds. Do the offices responsible for those utility bills? Are they spending their money on something else? Are they going to have enough left in their general fund to pay for utility bills through June 30th? Those are decisions that the county itself needs to make. What happened is we had some utility bills that we paid 2 or 3 months late. And what happens is whenever we find that, we're saying, well, you need to cover that. Then it grows bigger and it's like, what? We have to cover utility bills? You need to be responsible. You need to make sure that your bills are paid in a timely manner. And you also need to make sure that there's money available to pay us. Okay, any questions so far on those items? On receiving reports or utility bills? Any? Okay, problems that we're seeing on the financial statement. And I just want to mention this because we get better all the time, but we still have some of our financial statements coming in with transfers that really aren't transfers. There are specific statutory purposes for transferring money. Anytime that you're just correcting an error on a transfer, it should not be shown on your financial statement. And if you're having problems with that, and you need some advice on how to adjust it, we can give you technical advice. It's not something that you're just out on your own having to do. So if it's a portion of error and you need help correcting it, or if the funds were paid from the wrong fund and you had to transfer it back in, we can show you how to do that side of it. We're here to offer help. We can't. You've got to know what the problem was and give us enough information so we can give you technical advice. We can't try and figure it out for you. So the best thing to do is you're never going to hear us complain whenever the treasurer's doing those monthly reports and there's a transfer between funds. If you want to explain what each one of those were that month, rather than waiting, a year and a half for us to get there and us expecting you to remember like it just happened yesterday. Can't remember what I did last week. So I hear your pain there. But we have no problem if you want to put something attached to that report, explain why you transfer that money. Again, this is not a joke. Sometimes I put kids to one on my computer, I'm not sure which direction to go. There are limited reasons for transfer between restricted funds. Interfund loans must be prepaid before June 30th. Transfer of residual sinking fund collections to the general fund after all debt has been extinguished, and transfer of excess resale funds. Okay, this is just one more thing that I wanted to throw in here. Actually, Chief Jones asked me to put this in here. We have a lot of concerned citizens that call us having a fit because their name is published in the newspaper and they don't own the property anymore. And there was new legislation passed that requires the name of the owner of the parcel be updated to the current owner prior to the linking parcel being published in the newspaper. Anything you want to add on that?
I will just add that. I think that was from last legislative session, because a legislator had sold a piece of property, and he had sold a piece of property and it became a lien one, and his name got published as it was his. And so that updated legislation, I believe most treasurers and department, you have to have a file date so that you can prepare that delinquent list. And as far as I know, that's acceptable by the auditor's office. You have to cut off at some point on the changes of names on the landowners so that you can get your list together and get it to the publisher and everything. And that's perfectly acceptable that you have a policy on that, but our advice is to comply with the statute change as practically as possible.
So keep that in mind. Okay, that was the end of that. I do want to add that, again, whenever I ask Cheryl what kind of issues or what kind of questions does she have, and she also says destruction of records, so something that everyone had questions about. And attached to the after handout are the guidelines for the county assessor, county treasurer, and county clerk, and court clerk. And that's just a handy tool that you can take that and share with your county officials. Cheryl, anything else that you want, anything happening that you want to add?
One thing I want to add and remind everyone, the statute was updated. I feel like I'm loud. Am I too loud? The statute was updated on recyclable material. Most of you probably already have this policy in place. The statute on disposing of recyclable materials will be updated November 1st. We will allow you to get phone quotes for scrap iron and scrap metal and things like that. To get phone quotes for the removal and disposal and recycle those types of materials. So I think that's going to be helpful in getting a lot of the yards cleaned up and those things that really don't have a lot of value to you, other than they're taking up space and you're not going to get bids. Usually, if you go out for bids or have a public auction on some of those items. So I just want to make sure everyone's aware of that. It's kind of a new thing I was running into several people that hadn't heard of it yet. So one little reminder on that one. I'm going to look at my list. I think that's the main thing.
One thing too, if you didn't sign in, you need to, because we're going to get Steve ready to go issue for this for 3 hours. So please sign in if you have one. I'm going to say that earlier, forgot. And if any of you have questions, we're here for as long as you just hear anything that we can help with, any ideas you have, any problems you have you want to share. Because if you don't want to share with everyone, use that.
I think that everyone is aware that the statute, the Purchasing Act was updated so that you don't have to let purchase orders lay for 5 business days. That was updated in April, that purchase orders must lay for 3 days. They took the word business days out. So that might make your paying of your utilities and your recurring expenses a little bit more smooth in a more timely manner. That's one other legislative change that might be of interest to some of you. I think that's all that I have that's really interesting that I can think of right now.
Any other questions about anything we've done today or anything that might be issue for you? Okay, this time I'm gonna turn it over to John and close. And we do appreciate you when you return.
Well, thank you very much, and like I said, we want to do everything we can to try to be proactive and answer questions. Sherry, can you use mine? If there are any other issues that you guys can think about that we can help you with, that we maybe need to put classes together, even though we're just going to do these once a year, we're also going to be doing presentations at COLA and ACO. So if there are subjects that you think that we need to be addressed, don't hesitate to call Cheryl or contact Cindy. And because we want to, like I said, we want to be proactive. Like I said before, we can't make management decisions for you, and we can't prepare your financial statements. But that doesn't mean we can't tell you different options that you have, and you guys make those management decisions. But with that, if there's not any other questions, are there any questions that you might have of us or anything that we're doing that you think we could work better to help streamline the process? I think we've got a great group of auditors and managers, and one of the things I try to do is just give them the tools they need to stay out of the way. Any more questions? For those of you that aren't from Lawton, there's a lot of good places to eat. If you can't think of any place, you can check with Kerry or Commissioner Turner, and it is a great location to have